Okay, thanks for joining us, everyone, for today's Trading Buddies, which, of course, comes to you on the first Monday of June. And happy new month to you, happy new week to you, and, of course, happy new season to you as well. In the Northern Hemisphere, you're going into a summer, and in the Southern Hemisphere, like me, we're going into a winter. That's just the way she rocks. Let's get stuck in, shall we, and have a look at some charts and see what we're up to today. I'm going to start, as usual, with, if I can find my control panel, there we go, with gold, and see if we've got a breakout trade that we can actually put into motion today. Haven't been able to do that for a while on a Monday, and a couple of nice days there last week, by the look of it. Today, hourly chart. We've got a range from here all the way down to here. Which constitutes $16.50 movement there has been in gold already today. That's okay. What we're going to try and do is see if there's a trade to be had long and or short and see how that works. I don't like the fact that we've got an untested daily pivot sitting directly above our entry. That doesn't enthuse me at all. To the downside, let me have a look at those levels. Downside support looks to be around about there somewhere. Maybe we can sneak that up a little bit to there. And upside resistance appears to be there from a horizontal level point of view, but you can see that we've got pivots blocking our path to the upside. Daily pivot and the monthly pivot both sit above us. I can't even see the weekly. Where the heck's that? Yeah, okay. One would anticipate it's in here somewhere. But anyway, we've got a whole lot of work to do if we go long, and not too bad if we go short. So the range is, as I said, 13.5 pips. Reward to the bottom side about 23. Reward to the upside. Yeah, if you gain 30 pips, $30 rather. But I'd be very, very hesitant to trade through both of those pivots. That doesn't make any sense to me at all. So I'm not going to trade the breakout today because of these pivots, resistance area dead above us. So that's a no-no. Let me move on to something that may not be a no-no. I'm going to share a couple of orders with you. One of them is pound versus the Kiwi, and pound versus the Kiwi because, just let me do that and that. I couldn't see who was in the room. Because we've got a couple of things going for us here. The weekly charts, which is what we generally look at on a Monday, is a little bit indecisive in terms of we haven't got game changer bars, but we do have this resistance trade line, which was broken, consolidated above, rebroken, and now retested from below. That constitutes a potential false break of that level for me. And for that reason, the buying bar becomes the candle I wish to trade, or the entry I wish to seek. And it will, if you want to follow it, trigger at 2.0655. So 2.0655 is my entry short pound Kiwi. And my stop loss is just above this swing here at, let me add 324 pips to that. 2.0979 will be the stop loss, 2.0979. First take profit, I'm going to take at 216 pips, which is roughly the close of this bar here. And the level for that, if you wanted to follow it, is 2.0439. There you go, my master's working today so far. 2.0439 will be for TP1. I'll remove 1/3 at that point, and I'll sorry, move my stop loss 1/3 of what I took at TP1. So in other words, 70 pips, which will be around about there somewhere. So that'll be where the stop loss moves to. Why? Because that keeps me safe in the market. Then if I'm taking 1/3 off, then I can move my stop loss 1/3 of the risk, of the first take profit. That gets me a free trade. That's one order. What else have I got in the market? Euro Swissy. Euro Swissy also trading short, and weekly bar here is, I think, a game changer bar. Might not be. 99283, 99293. So yes, it is. That's a game changer bar because the high is higher than the previous week and it closed on or near its low. Now, why do I like this one? Well, a couple of reasons. One is that we do have a weekly game changer bar. The other is the daily chart. And the daily chart, just like I showed you on pound versus the Kiwi, is giving me this. That's giving me a break. It's giving me consolidation. It's giving me a re-entry below the trade line and a retest of that trade line. Now, ordinarily, in this circumstance, with a potential reversal, I'd be looking for a lower high after we got the reversal. Don't really have that. And for that reason, I'm trading this at very small risk. Also, because I also am exposed to Euro Aussie short, which I got into last week at some stage on a terrible news candle, and it's still trying to hang on here. So I'm exposed to Euro Aussie and therefore Euro Swissy. I'm trading at a very, very small risk. If you wanted to follow that trade, the entry is at 0.9767. The stop loss is at 0.9851. And the first take profit will be just around about the 1-to-1 mark at 0.9685. Once again, I'll close 1/3 at that point, move my stop loss 1/3 of 82 pips, which is around about 27.33, if my maths is serving me correctly today. So that's Euro versus the Swissy, also a short. Have I got anything else in the market? Euro, Aussie, pound, Kiwi, Euro, Swissy. No, that's it. Everything else expired last week. I think I left you with pound versus the CAD. We didn't have a last week, did we? Because it was a bank holiday in the UK. I traded last week, which didn't trigger this pound versus the Canadian dollar. The reason I traded it was I was looking for a false break of the breakout, if you like. You can see that candle there, which broke the highs here. I've been trying to do that for some time. Didn't go on with the job, and I was anticipating that would be the case. So I put my entry underneath that bar with my stop loss above it. That has not triggered, but now there's a different circumstance. And that circumstance is that the monthly pivot moved from here right up to here, giving me absolutely grief. If it were to bounce off there, I'd probably get triggered in and I'd get a bounce and therefore get taken out. So not willing to take that risk. What I would be willing to do is see price come back underneath there and retest the horizontal level and or the monthly pivot. Now that could happen on a daily chart. And this is the level I'm talking about. So we have to come down here and then shoot back up, give me a lower high. And then that would convince me that the double top is in play and we could have a reversal in our hand. So that would be pound CAD that I did trade last week or put an order in last week, but nothing happened. All right, let's move on to the game changer bars for the week. And they begin with right up the top, Aussie versus the CAD. Now, those of you who aren't familiar with game changer bars, or what I call game changer bars, you can learn more about them if you were to Google key reversal bar, because that's exactly what that is exactly what that is. Just hang on a second, I'll see if we are recording this session. Something tells me we're not. Resume recording. Sorry about that, guys. And for those of you joining the recording, welcome. I'm just going through the game changer bars at the moment. Aussie versus the CAD is the first of them this week. Now, as I said, those of you not familiar with what a game changer bar is, simply refer to a candle called a key reversal. And that will tell you, not in my exact terms, but very, very similar, that the high of the previous bar is higher than the one before it. Sorry, the high. This is last week. I'm going back 2 weeks and I'll explain that to you in a minute. Key reversal bar is a bar or candle whose high is higher than the previous candle and closes on or near its low, or a candle whose low is lower than the previous and closes on or near its high. So obviously, if that were the case, we'd be looking to buy here. And if this was the case, we'd be looking to sell here. Now, neither one of those would have triggered, right? But this is marginally higher than that and close on or near its high. The problem I have with that as a game changer bar, now game changer bar is suggesting that we trade in the direction of the bar. The problem I have with that is twofold, really. One is we have this horizontal level, which should be clear to you. It's been resistance here, resistance here, resistance, resistance, support, support, failed resistance here, support through here, resistance through here. So the level's pretty strong. And prices fail to come back or close back below that. At this point in time, that looks to me like a potential ABC trade. So A being the advance through the level, B being the bounce off the level, and C being the continuation. Little problem with that as well, in that where do I put my stop loss? I'd have to put it under here, somewhere under the monthly pivot if I were to go long here. That's Aussie CAD. So the game changer bar is actually a game changer plus bar. So take on board what I said about a game changer bar and then add to that an inside bar, which is what last week was. So that's suggesting that if you go short underneath the inside bar, then you'll pick up the continuation of the game changer bar. It's a little bit complex, I know, but that's exactly how that works. Because the monthly pivot's there and because we're at that level, I'm not willing to go short, nor am I willing to go long. So that would be a no from me. Aussie yen, game changer bar to the upside. So the low is lower than the previous, closed on or near its high, closed very near the high. And for that reason, and the fact that it's the yen, and I can't possibly predict what's going to happen to the yen day to day, I'll be staying out of that and all yen trades. CAD versus the Swissy, suggesting that we are sellers here this week. Game changer bar at resistance. Actually don't mind this one, except that you can see the box range that we're in here. We are very near the bottom of that box range, and that makes it very, very difficult to go short. But that candle suggesting that we do. So if you fancy CAD Swiss short, then an entry underneath here, stop loss above, probably above that bar would make sense. But what doesn't make sense to me is that range. And if I go to the daily chart, you can see that probably clearer. And in fact, I'll box it in for you. So pick your highs, probably through there somewhere. And the lows through there somewhere. It's pretty clear, right? False break, false break, false break, false break, potential bounce, and now potential bounce as well. So probably looking to fill that for one more time. Of course, it could break. That's not what I'll be looking to do. I'll be looking for the bounce to produce a higher low in here somewhere on the daily chart or even on the 4-hour chart would make sense. That may well, in fact, be happening as we speak. If that were to be the case, pardon me, then I would look to buy this, not sell it. So CAD Swiss needs to break that level and retest it before I would get short. CAD versus the yen, weekly chart once again telling me that we should be buyers this week. Problem with that one is we've been buyers for the last 4 weeks in a row, and we're very, very near the highs from the previous month or so. So trading into that doesn't make any sense to me without a pullback. So pullback, yeah, go, but I'd be very hesitant to enter the market there at those highs. Euro versus the Aussie is next. Euro versus the Aussie, sadly for my Euro Aussie short, is telling us that we were buyers, or should be buyers this week. And we go back to that, what I call game changer plus bar. So we've got 2 weeks ago, the game changer bar was telling us to buy, and then we got an inside bar. That is a signal that price, if it were to come back to here, will go long. And it also looks like a false break of this trade line. So against my my trade short and my bias short Euro Aussie, this does look like a genuine setup to me. The one thing I would add is that it has to agree with the major theme, which may or may not be the case here. What is really controlling this market is the question. And I suppose if you come from here, you'd be saying that the market is going long. But the other side of that, of course, is, and I can't see the highs because we've got a control panel there. We've also got that going on. On balance, I think we're between the two, and therefore probably headed higher. That does not agree with my bias. My bias is based on, well, I'll show you in a minute why I've got a bias in that direction when I go to the currency indexes. So I'm not keen on my short that's already in the market, and I may look to place a long, depending on what I see today as a close. At the moment, we're looking very strong in the buying department, but we've looked pretty strong in that for the last 3 or 4 weeks as well. But every time we try, we reject, hoping that's the case again. So Euro Aussie is a buy, but not on my watch at the moment. Euro versus the Swissy, I spoke about this one earlier, and we have a trade on that one short underneath that bar with the stop loss above the swing. If you wanted to follow that, I'll give it to you once again. There are a couple more people viewing at this point. Not Euro Aussie, Euro Swissy. The entry level 0.9767, and the stop loss is at 0.9851. And my first take profit is at 0.9685. If you wanted to follow that one, that's Euro versus the Swissy. And the game changer bar is telling us to go short as well. So that's the one I do agree with, Euro versus the Swissy. A couple more. Pound versus the Swissy is next. And clear game changer bar, higher than the previous close, near its low. On the monthly charts, it's showing us that we are at a resistance level, so potential bounce off here. We are also in a protracted downtrend and have been for the longest time. So this looks to me like an excellent place to go short this pair, pound versus the Swissy. Game changer bar is suggesting that we do that. The only issue I have is that you're trading straight into this previous resistance level. So I'd probably be expecting a bounce off that. And if that were to be the case, that would then present me with a lower high in here, potentially present me with a lower high in here, somewhere up at this level. And that's where I'd like to short this pound versus the Swissy. So definitely watching that throughout the week without question. Pound versus the Swissy. We've got Kiwi Swissy next, and that is the last of the game changer bars. And very, very similar pattern in that we've had selling, and last week, it's Friday's bar. Last week came off the low, making it quite confusing. But we do have a game changer bar suggesting that we are sellers. That certainly agrees with the major trend, if you like, and looks potentially like it might want to come back and retest that breakout area. Problem with that is that the monthly pivot is bang in our way. So if you were to enter here, you'd be risking a bounce off the monthly pivot and for the current trend to actually continue, because after all, we do have higher highs and higher lows forming. So the trend currently, short-term trend, is indeed long. What else have we got going on, guys? They are the game changer bars for the week. I've given you my orders for the weekly charts, and now I'm going to give you the reason why I think a couple of these can actually produce some money for us. First up, I'm looking at the indexes, the currency indexes, which primarily are the Euro, Aussie, Kiwi, Yen, Canadian dollar, Swiss franc, and the British pound, as measured against the others. But primarily, you'll find that it's pretty much against the US dollar. What they're telling me this week is very, very little. But there is a couple of nuances there that I want to point out to you. The dollar index itself looks to have bounced off this level here, but I'm actually looking at the daily chart. So on the daily chart, that looks like it might want to bounce. On the weekly chart, however, it's kind of in the middle of no man's land. And here's why I say that. You can see the resistance trade line, which has been broken and retested. That's the classic false break that I speak about often and that we are trading at the moment on a couple of pairs. That resulted in price coming straight down to the horizontal level here and almost to the trade line, which of course is the bottom of our triangle. Not almost, did, to the pip. You can see at the moment that the week after that, we had a no result week, so tried to go back to the top of the triangle, failed, and the same last week. So I'm kind of in the middle of nowhere with the dollar, so I don't have a strong opinion either way. Then we do have NFP coming out at the end of the week that may well determine the direction, but we've got to wait till Friday for that. The euro tried to break through this triangle that we've got on the euro, which goes way, way, way back there, but failed last week. And for that reason, I think we're probably going to bounce, even if it's only for a short period. I think we'll get a selling couple of days on the euro. And that, I'm not seeing that at the moment, I must say, but I would be looking for the euro to come off a little bit this week, maybe even down to here. So quite a few days of selling, perhaps, on the euro, we'll see. So I'm bearish the euro. The Aussie, we've been speaking about the Aussie for some time because of this double bottom sitting here, this beautiful tweezer bottom that sits right on the trade line and horizontal level as well. It's rejected that, really vigorously rejected that, gave us the higher low, and we haven't yet made it to the top of our triangle. So I think the Aussie is destined to get to that point. So for this week, I'd still be bullish the Aussie. Every time it's tried to go lower, it's failed, and I think that's going to continue to be the case. So Aussie a little bit bullish, euro bearish. Kiwi is really the only currency pair that I would hang my hat on at the moment, and the reason for that is that it's broken resistance, broken out of our triangle, and tried to retest it, couldn't even come back that far, and then last week took off from the retest of that blue line, which was the horizontal level. I expect that that will continue because we have had a clean breakout here. The little non-retest, if you like, followed by another buying bar. I think we've got more buying to come on the Kiwi, so I'm bullish. The Kiwi, I think that's the clearest currency in terms of where it's headed. The yen, the poor old yen, out of favor once again last week, and very, very difficult to be a buyer of the yen, although it must be said that it's also very, very difficult to be a seller because it is so oversold. It's crazy. That doesn't mean I'm going to buy it, so I'll be steering clear of the yen yet again. The Canadian dollar, similar to the Aussie, in that we've got a triple bounce off the bottom of this rectangle, and every time it tries to go lower since, it fails. Not yet at the trade line, but very, very close there too. And similar to the Aussie, I think that is a fait accompli that will happen, whether it's today, tomorrow, or next week or next year is the one thing I can't tell you, but I'd be looking for that to continue. It is at a resistance level, however. You can see in the past that's been support, resistance here, support here. So a little bit tough on the CAD. Not sure it can get through that and to its target in the next day or so. But so for that reason, I'm a little bit ambivalent on that as well. The Swiss franc's interesting. You can see the channel that I've got on my chart there. That's been there for the longest time and is very reliable. Price broke through that about 6 or 8 weeks ago and has yet to find its way back into that channel area. Tried last week yet again to do that and failed yet again after 1, 2, 3, 4 times trying to get back into there. Is this the week that it does? Good question. Can I predict that it will? Have no idea, to be honest. But at this point, all I see is a failed attempt yet again. So I'd be probably looking for selling on the Swissy, at least in the short term. Maybe another try. And if it does break through there, then I think you've got a buying currency, a currency you can buy with confidence if it does come back into that area, because it's tried and failed. If it were to get back into there, I think buying is the way to go. So again, ambivalent on the Swissy. The British pound has reached its destination, in my humble opinion. And for that reason, I'd be looking for a bounce off here. And that makes it a bearish outlook for the pound this week, which really leaves us with, what did I say? I was a little bit bullish still on the Aussie, but definitely bullish on the Kiwi. So that plays to my pound Kiwi trade that I pointed out to you. I'm pretty sure all of you have got that one if you wanted it. If you want to have a look at it, 2.0655 is the entry level. The stop loss is at 2.0979. And the first take profit will be at 0.20439. I think I've got all that okay. Rightio. I don't see Ash in the room for some reason. I don't know where he is. I haven't heard from him, so we'll just continue on. Let's have a look at the gold chart from a bigger viewpoint. Let's have a look at the weekly chart, for instance, where we've got 2 weeks ago a massive game changer bar and a massive bearish engulfing bar at previous resistance. The problem with that is that I don't have confirmation of a reversal. Yes, it's telling me this is the monthly chart we're looking at now. The monthly's closed. There's a big tweezer top sitting there. And when we come back in 6 months' time and prices down here, we'll say, well, why didn't we trade that? Well, the reason I don't trade that is because I need confirmation that it's actually the top. How do I find that? Well, I'll use my little pen here and show you what I would need to see to actually be a bear gold. Double tops most definitely in play. But to confirm that double top is the high, I would need to see a failed rally. So price rally, and fail to take out the highs. If I were to see a reversal bar at that level or anywhere near that level, then that becomes the seller bar for me, because you've then got 1, 2 rejections of that level and then a failure to get back to that level. So the lower high becomes the trigger. So until I see that, I can't really be a serious seller of gold. If I do see that, then I can be a serious seller of gold. Where to? Well, I would say here in the first instance. I would say probably there in the second instance. And that'll probably do us. No, I'll give you one more. Maybe down to there. So that gives us around about the 2300 mark, around about the 2150 mark, and around about the 2000 mark, if gold were to reverse. Could I actually anticipate that, I suppose, is the next question. And yes, we can. But it would be higher risk than normal. So how do we do that? Well, we drop a couple of time frames. Let's go down to the daily, for instance, where we saw, what is it, last week, 2 weeks ago, we saw a break back below this trade line. Now, I speak all the time about false breakouts. Why? Because they're my favorite things to trade. Why? Because most breakouts fail, right? So it's logic to me to be looking for something to trade false breakouts. And the way I do that is exactly as I'm depicting here. Now, this trade line, as I call them, is a bit of a play on a trend line, right? But instead of using trend lines, I use things called trade lines, which primarily join swing lows and swing highs, no matter whether they are trend lines or not. They're important levels to me. And once broken and retested like that, as I described before, I'll be looking to trade that long above this bar. Why? Because it confirms to me, similar to that lower high I'd be looking for, this bar confirms to me that price cannot get back where it used to be. And therefore, if that doesn't happen, then it's likely that that will happen. Only to this level here, because they're the highs. Then you take most of your profit off, or I take most of my profit off the table if I see that. So that's what I'd be looking for. But then when we hit the high, come back off it very, very vigorously, big seller bar, big seller bar. So back underneath that line. Then I look for a retest of that level, same as here, break, retest, go long above the bar, break, retest, go short below the bar. Now, this hasn't happened in a timely fashion for me. The timely fashion is that exact thing. One up, one back, enter here. I've got one back, I've got one up, I've got two up, I've got three up, and now I've got a mess on my hand. So that is not really valid for me now. And that line can actually go. What is now important is this line here, which is the same thing, obviously, as support, whereas this one was resistance. So the support has been broken, but I don't know what to do yet. I don't know whether that's real. I don't know whether it's going to be false. And the thing that will tell me, remember back here, where we had this situation, where the break was followed by the retest. Well, here's the break of this support trade line now, but I haven't had the retest. So if I get the retest, then I can put my entry underneath that retest bar, put the stop loss against the one that broke it back, and then I can look to trade it short. I'd be taking profit here, as I said before, and that would be the way I'd look to trade that. So it's a no trade or no go zone for me at the moment, but that's exactly the way I would look to play it. Quickly going to sneak to euro versus the dollar, because at the bottom of the hour, it becomes a trading opportunity for me. Why so? Well, because I don't trade the first candle of London session. That's why. And the reason for that is I've been burnt many, many times trading what I perceive to be my setup, only to find that the opening candle goes, well, look at this one. If I were to be looking to buy that right above here, bang, the first candle of London session smashes me out. If I were now to look at the chart and put my lines in, my trade lines, as it were, I can see I've got a break. I can see I've got a retest, just like I was talking about before. And now potentially I would have an entry short, but I'm not going to enter on that bar because it's now closed below our entry. So I would have looked to trade that short underneath here as my first trade of the day. But because it's London session, I would have been taken in here, and I've got no idea what's going to happen next. What I would now like to see is this become a low and a break and retest of what would be the new trade line, which would be down here. So I just wanted to have a quick look at that because it's now a tradable commodity for me. What I don't like to see is the fact that we've had a test now of the daily pivot. The reason I don't like to see that is because it is one of the things that I hang my hat on. With euro dollar, you can see very, very readily that the daily pivot is tested most often. And didn't hear, did hear, did hear, did hear, and has done today. When it hasn't, and prices a distance away from it, it draws me back to it all the time. Because euro dollar is very much a reversion to the mean currency on a intraday basis. And you can see that most often, right? Goes up, comes back, down, up, down, up, down. So this is very much a reliable thing to do. If you can find a number that is highly probable, and it is the daily pivot, highly probable that price will test. Here's a classic example here, where price all day long has been running away from the daily pivot. Daily pivot's the blue line, right? Has been running away from the daily pivot. That is juicy for me. And I can't wait for those setups to come. And eventually you get the turnaround and daily pivot test. And that's exactly what I'm looking for intraday. Today, that edge, as it were, has now gone because the daily pivot not only was, and this is an interesting one, and I say this often, when the daily pivot is tested, this happens. So price is a distance away from the daily pivot and comes back to it. Here, today, the daily pivot's come to price, not the reverse. So you can see the subtle difference, I hope. Let me explain that a little bit further. Pen. Right, so price, untested, daily pivot in here. And price is going that way. Classic, absolutely classic, what we're looking for. Here, price comes to the daily pivot because the daily pivot's already established, right? And therefore is a leading indicator. Really? How so? Well, I know, because I've tested it time and time again, that there is a strong chance, high 70% mostly, that price will test the daily pivot on euro versus the dollar at some stage during the day. I know that. Therefore, my highest probability trade is not ever going to be short when the euro is running that way. It's always going to be long when I've got an untested daily pivot, and price, of course, comes there. Same here, running away from the daily pivot, being tested again. Here, price is at the daily pivot already because the daily pivot has come to price rather than price going to the daily pivot. I hope that's clear. If that happens in the first couple of hours of the day, that price is actually at the daily pivot and begins at the daily pivot, I still expect that it will be retested at some stage. And that's exactly what we've seen already today in the first candle of London session. So that's just a little bit of a hint for you as to why I look at euro dollar every single day. If you wanted to test that on your own currency pairs, it's very simple to do. Let me show you how. Let's go with Aussie dollar. Where's that? Aussie dollar. There we go. Looks like I had an order on Aussie dollar, which is now expired. So we'll get rid of that. We'll get rid of our trade lines. And we will mark the daily pivot. I'll go to that template. Daily chart. We want the 4-hour chart. Okay. So very, very simple process. To get the probability of how often the daily pivot is tested on Aussie versus the dollar, you simply, and it doesn't matter how many days or months you want to use as many as you like. I'm just using this because it fits on the chart. So I've actually got, and we'll count them together. I'll go a little bit tighter actually, so you can see what I'm doing. Daily pivot is the blue line or aqua line, right? Every time a candle cuts it or touches it, that's a test. So let's count them. Yes, no, yes, 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 but it happened very late. You'd have to have been awake or late into London. Yes, yes, yes. Oh, I didn't quite test it. It's a half, that one. That one did, yes, yes, yes in here, no in here, yes here. That'll do for now, right? You can get the picture, you can get the drift. So we've got, how many days are we counting? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. So there are 15 days possible on this chart. And out of those 15, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times out of 15 has the daily pivot been tested. Anybody want to tell me what that is in percentage terms? I'm going to go with 67-ish. Let me go with 68. I haven't got a calculator in front of me. But if somebody wants to correct me on that, that's where I'm going. I'm going with 68% of the time. Is that right? Yeah, round about there somewhere. As I said, if someone wants to correct me on that, please do. So 68% of the time on this particular chart, Aussie versus the dollar, in how many days? 15. So 3 weeks of trading, you've got 68% of the time. I would encourage you to use a bigger sample than 3 weeks. So maybe even 3 months, you could do that exercise. And you can do that on any pair that you like. And if it gives you a number like that, and I can tell you euro dollar is somewhere between 65 and 85 most of the time, doesn't that give you an edge? It should give you a thought process at least to say, okay, when, and let's put this into practice. Let's say when sorry, I've got to get rid of my pen. There we go. Let's say when price on this particular day, right here, and this is what I described to you before, daily pivot went to price before price went to the daily pivot. But the daily pivot was tested at some stage. That's the 4-hour chart. I'm going to mark that day. Make that a bit bigger. There we go. So let's look at that. Let's go to an hourly chart and have a look at that. See what that looks like. Okay, so scrolling back, there's our day right there. So like I said, price went, I'll move that off there. Price didn't actually test the daily pivot, or the daily pivot didn't actually test price until here, the 3rd hour of the day. But then price went away, 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 away. Now, it's your job to find a method of entering here. I've got my own methods of entering. But once you've got down here, maybe you're well in, you're probably getting nearer to US session here. So this will be a lot to do with timing as well, of course. But once you've got this running away and finding support, as it were, you can see it's been resistance here. So it found that support level, whatever that support level was. It's now time to think, oh, daily pivot went to price. Price didn't go to daily pivot. And I've got a very strong chance, 68% in the last test that we did, that price will come to here at some stage during that day. Up to you to find a way to trade that. The next day, exactly the same thing happened, where no test of the daily pivot, didn't even make it to resistance this time, but it did turn around and headed towards the daily pivot. So your job is to find a way into that. Same here, price was going away from it, found that support level again, and went straight to the daily pivot. Here, wouldn't have had too much chance to make money in here because it didn't go too far away from it. Here, same story. Didn't quite give you a good opportunity because it didn't come to support, but you get the picture. Here, it did, ran away, false break of support this time. So broke support back above it, retested it. There's my entry right there. Daily pivot test. The rest is history. Didn't do it here. And you'll find that most often when it doesn't happen, it's due to a data release or a news event or something unusual. And when that's the case, you probably won't even get a look in. Same here. Hit, didn't really, I don't know where resistance is. I should have put that line in. Let me do that. There's your resistance there. Hit it perfectly. Come back towards the daily pivot. Uh-oh, you got hammered. But eventually it went there, right? You might have had to have a second bite at that one to actually get it there. Here, you didn't get much chance, but the same thing happened. That would have been a news event by the look of the candle. Here, running away, hit support, bounced off support back to the daily pivot. Here, hit resistance beautifully. Didn't test the daily pivot, but it's still on its way down. Do you get the picture, guys? That is a very, very clear edge that you have on your charts intraday, every single day. But you've got to do the work. Right? You've got to go back and how long did it take to do that work? 1 minute, not even. So go to the 4-hour chart. Make sure you've got your daily pivot on your chart. Count how many times it's tested in that, in whatever period you use. You can go back as far as you want. And on euro dollar, I don't know how many times I've done that exercise. Call it hundreds. Hundreds of times I've done that exercise. And every single time I do the exercise, no matter where I'm going with it, if I use a month, if I use a week, if I use 3 months, if I use 6 years, it always gives me the same edge, somewhere between 65 and 85%, as I say. I would encourage you, if you like intraday trading and like trading on 30-minute charts or even smaller charts, that you do that exercise and find where those little edges are, where you can actually go to the daily, or when price is going away from the daily pivot, you can look for that. And when it turns around, happy days. Like I said, euro dollar is not giving me that opportunity today. Is anything else giving me that opportunity? We looked at Aussie dollar, and I think it's been tested, has it? Yeah, already. So price went, sorry, daily pivot went to price. Price came back to the daily pivot. So that edge is gone for the day. Let me look at, what did we look at? Didn't look at the pound. Daily pivot being tested. Yes, it has. So what I've just shown you is completely gone today, but do the exercise and you'll find that once you come up with a number that's, 65% plus, you've got a fair idea that if price is away from that area during the day, then at some stage it's probably going to go towards that, if not test it. And most of the time, test it 70% each, right? Guys, I think that'll probably do us for today. I'll have a look at the indices. Oil, what's oil doing? I think we've got OPEC meetings today, or had OPEC meetings today, I'm not sure. That looks to be an interesting little scenario for me. Why? Because we've got, or you could even use that if you wanted, followed by that. So I'm always looking for chart patterns, right? And this is one. You can call it the bugle, you can call it the trumpet, you can call it whatever you want, but it's ever expanding. The cool part about that is it keeps bouncing off the expansion. Bounce, 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 bounce. So what do you think I would do when price gets to here? Yeah, I'd be looking to buy. Does it mean I'll put a buy order there? No, it doesn't. What it does mean is I'll go down to a smaller time frame when it does and see if I can pick up a trade. Let's see if that was possible here, 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 or here. So let me get rid of, I'm going to keep the drawings, and go to, let's say, an hourly chart. They're going to look different, of course. Of course, they're going to look different. Duh. Make it a 4-hour chart. Get rid of those and I'll put the new ones in. Righto, so that equates to this pattern here, right? So I've gone to a 4-hour chart. A little bit closer. There we go. So I don't know what your method of entering the market is, right? You've probably got much different methods to me. That doesn't make me wrong, doesn't make you right, doesn't make you wrong, doesn't make me right. It's just a method. But my method of entering the market is once I've hit the top, I'm looking for a lower high. And once I hit the bottom, I'm looking for a higher low. In this case, how would I have gone? So we don't count that because it's the first one, but we do count that one because it's the second. So as soon as I get that bounce, I'm looking for a lower high, and there it is. Now, if I traded that, say there, I would have got my trade to the support level. Then I would have got my profit down here to the bottom of the range. So tick. Then I'm looking for a higher low, which I got in here. If I traded that there, I would have got the top, tick. Then I'm looking for a lower high, which I got there. If I traded that there, I would have got to the bottom, tick. Looking for a lower high. Wow, it's hard to see. So you probably got to wait till that one. And guess what? You're in the market and you're waiting for this to happen. Can you see how those chart patterns can be most useful? So that's oil. Oil's really technical. And I haven't done this exercise on oil at all, but it doesn't surprise me one little bit to see that once you've recognized, let me go there. Once you've recognized that you've got a chart pattern, you can take advantage of that big time by just dropping a couple of time frames and picking up, well, in my case, I'm looking for higher lows off the bottom and lower highs off the top. There's none there, right? Zero. So you're a scalper here. If you hit the top, you're scalping to the bottom. You hit the bottom, you're scalping to the top. My method is far more reliable and far less lucrative per trade. But I got every single one of those, right? Every single one of those produced, apart from this one, which hasn't reached there yet, produced a trade at low risk. Why low risk? Because where do we start this exercise? We started this exercise on gold, right? Where we looked at reversals, so double top, looking for lower high. Looking for reversals here, looking for higher lows. That's the key to picking reversals for mine. It's not guessing that this double top is going to produce a selling period. It's waiting for that lower high to confirm that price cannot get back to that level, and therefore the likelihood is it's going to fall. Guys, that's about it from me, I think, today. As I said, I'm not sure where Ash is. I'll check on him shortly, see he's okay. I'm trusting that is the case. He may have had an IFP on the weekend. I don't know. Not sure if there was an IFP, which means he's probably asleep. So I'm going to bid you adieu, unless you've got any questions. And I'm more than happy to answer any questions on any of those things that I've just taken you through. And I hope they made a little bit of sense to you, and maybe they can give you something to chew over the next day or so, or next couple of days. Are we all good, guys? Everything okay? Very quiet in the chat box, so I'm assuming that you are happy as Larry. All right, let's call it quits then. I will be, of course, back next Monday, and hopefully Ash will be with me. I'm sure where George is back from his little soiree as well. We've missed George, and hopefully he'll be back soon. Right, guys, no questions. Happy days. Have a great week, and we look forward to catching up with you next time. See you later. Bye-bye for now.